My name is Joseph Cusick from the Cusick Group, securities offered by MoneyBlock. Here to give you a little bit of a technical approach. The market in general right now, just to give you an update, is flat to slightly down, but it's basically been unchanged all day. Light volume. We're going to see this taper off as we get into the tail end of this holiday week, going into the Christmas holiday. So with that being said, we still though have tons of activity going on that's notable here in Tech Talk. That's where we're going to marry a little technical analysis, a little option analysis, give us some transparency on where stocks are going and what's the catalyst. There's a couple names that I want to bring up that are based on some option activity that I saw today. And for those of you that aren't options traders, that's okay. You're going to get some context because I'm going to give you forecasts for stock direction, either up or down. I'm not going to give you a bias of whether I'm bullish or bearish, but these are unusual option activity that I saw this afternoon. And the first one that I want to start with is typically a stock that I normally wouldn't talk about because of the price, but I'm also have an affinity for proprietary drug delivery platforms. Yes, I know that sounds very odd, but these biotech names have been on the move, and there's one that I've traded over the years that always keeps these types of names on my radar, and this one came up. It's called Direct Corp. Now the stock's trading at $1.33, which would be considered basically a cheap option, but that's the stock. It has decent volume. It's basically been averaging over 600,000 shares a day. My rule of thumb is typically 1 million shares on average a day, but this one's really picked up, and I thought it was notable with the action that I saw. I saw 3,100 of the DRRX, that's the ticker symbol for the stock, January $2.50 calls. Now, they primarily were trading at around 5 cents. This is what I call the lottery ticket trade. It has a low probability of being successful, but with these biotechs, most of these trades in biotechs have a low probability of being successful. A lot of risk here. In this case, there's a strategist for basically the next 29 days is willing to put up 5 cents 3,100 times. The options right now that are expiring in January are pricing in the potential of this underlying having a range of basically 67 cents to the upside or 67 cents to the downside. That's basically getting you at $2 on the upside, or it's getting you right down to, let's say, 60 cents on the downside here in January. That's the range that we're looking at. Now, open interest in these options before the 3,100 contracts traded today, in other words, the total number of contracts being bought to open or sold to open was at 730. So there was some volume there. Implied volatility is through the roof. It's at 194%. So this is an extremely volatile opportunity. This thing with basically a 50% move being priced in either up or down right now as far as a range for the next 29 days. This is a volatile underlying. What's also notable about this is that about 2,800 contracts traded at a single transaction. That's important. That's telling you that there's one strategist that really believes in this thesis that the market's going to go up above basically $2.55 before January expiration, or at least have some pop to challenge in a very short period of time, $2+. The areas that you're going to want to watch as far as support or resistance, it's all support at this juncture. Actually one resistance level too. 130 and 127. These are the areas that you're going to watch very closely. If the stock continues to move to the upside, that means that there could be some institutional nibbling. The 140 mark is going to be a very critical long-term resistance level. Breaks through there, you could get a catalyst to further upside. Now, the company doesn't have earnings until March. That's after the expiration of these options. So something's up, but there was a couple other drug delivery names and platforms that were on the move today. One that I've traded in the past, as I have noted, I didn't give the name, but it's Depomed. That's what caught my eye. And then I saw Direct Corp trading. Another name that I saw that most of you are going to know is Gap Stores. I wanted to bring this one up because there's been some notable earnings announcements and guidance that have come out on bricks and mortar retailers. The most recent one was Finish Line. They missed on and guided lower their earnings and their guidance. And also they said that their October-November foot traffic was down. Now, the company has confirmed their earnings for February 23rd after the close, and they do have an ex-dividend date on December 30th. I did see a notable trade in the weekly, the first week of January, $26 strike calls. They traded roughly for right around, on average, around 35 cents, about 3,970 times. So 3,970 contracts traded at right around, for an average price of around 35 cents. What's notable about the open interest is it was about 700 contracts. So there has been interest there. Implied volatility is really high. As a matter of fact, it's ranking at the 98% level. That means that there is an inclination or a forecast that there could be potentially big violent moves in this underlying. As a matter of fact, going into that first week of January expiration on these options, they're pricing in the potential. So basically over the next 2 weeks, that gap stores can move either up or down about $2.62 on this $23.87 stock. So very interesting action. Some of its peers are already moving to the downside. Now the stock is down 27 cents today, not down as many of its peers like Finish Line, Dick's, or Foot Locker, but we're going to keep a close eye on this. There seems to be a strategist out there that's putting on a 2-week bullish call opportunity out there. These are out of the money, so they have a low probability, roughly around a 30% probability that they're actually going to be in the money by that first week in January. So we're going to watch that one closely, but the options are pricing in the potential for a pretty decent range, either to the upside or downside. Critical levels that you're going to want to watch, 25.20, 26.33, and 24.23. These are all critical levels that could catalyze the stock even further if, in fact, they start to get broken. That 24.23 level is also a long-term resistance level. Taking a look at MGM Resorts. Stock's trading at $29.28, up about 65 cents. It's about 5% away from its 52-week high. So that's some notable action there. Saw a very interesting transaction here. 7,600 of the June $32 calls started trading at $1.17 and got as high as trading at $1.52. Open interest today, before today's trade, was right around 90 contracts. So there hasn't been a lot of trade there. Implied volatility is heightened, so there is an expectation that this stock could move between now and June expiration. As a matter of fact, specifically, the June options are pricing in the potential for this stock to be between now and June, which is roughly about 6 months now, in a range of either up $5.71 or down $5.71. So you're basically looking at either a $35 or $34 stock or as low as a $24 stock. That's the range that they're working with between now and June. The company did report earnings last month and expect to report somewhere around mid-February. Now, you're also going to want to watch what's going on in China, specifically Macau, and you're going to hear what's going on in Las Vegas as far as the December data. They're expecting to put those results out on the gaming data sometimes in early January. So we're going to keep an eye on that, but it seems like a strategist is strategizing well in advance, looking for some bullish activity in MGM and in that gaming stock. There was some bearish activity that was notable today. I did see one stock that caught my eye. It's called Windstream Holdings. Stock's trading at $7.68, down 9 cents. This is an advanced networking, computing, for large businesses, as well as offering broadband phone and digital TV services to rural areas. Now, what was interesting about Win was about 1,020 of the Win May $7 puts traded for 60 cents. First of all, these are 60 cents out of the money. They're paying 60 cents, so their break even is the difference between the price they paid and the strike price. So you subtract that 60 cents from 7, so they're looking for a break even of $6.40. Now, the May options are pricing in the potential for this stock to basically be in a $3 range, specifically $2.93. So it could be as high as $10 and some change, or it could be as low as $4 and some change. Now, open interest, in other words, the number of contracts that had traded before today, was only 80 contracts. Implied volatility is moderate, and the company is expecting to report earnings in February. It did repeat its guidance on December 6th, and they're going ex-dividend on December 28th. Critical levels that you're going to want to watch: 755, 763, and 847. Really watch those that 755 and 763. If they can get above those levels, you could be seeing some catalysts as far as maybe some larger investors and institutional investors coming into the stock, especially if they continue to have decent headwinds as far as either peers or their guidance continues. All right, folks, that's it for Tech Talk today. It's 4:30 Eastern Time, 3:30 Central Time. I'm going to wrap up today's trading session with the closing bell here at MarketStream.live. So join us. Thank you for joining us today in Tech Talk, and we'll see you in about an hour. Take care.